This is the podcast of finews. My guest today is Marcel Fritsch from Bellevue Asset Management. Welcome, Mr. Fritsch.
Hi, thank you.
The healthcare sector recently underperformed. What's the reason?
Quite simple. On one hand, especially in the US, where the healthcare market is very important, we had a lot of political uncertainties from the Trump administration. On the other hand, the economy was quite robust in the couple of last years. So there we had rather cyclical sectors which outperformed.
Where do we stand today?
Today, as I mentioned, underperforming healthcare sector. Why was the underperformance? Did something change in the fundamental data of the companies? No, it didn't. It was just like a multiple compression, so to say. So today we see, if we compare the broader healthcare market versus the broader equity market, we see a discount of 18%. So that's a record low over the last 10 years. Usually we see like a 5-10% premium. On the other hand, if you take a look at the weighting of the healthcare sector within, for example, the S&P 500, at the moment it's 9%, just 9%. Historically, it was rather like 12-14%. It was up to 15%. Why do we see it positively today? I think a couple of things here. Towards the end of 2025 or in the course of 2026, the U.S. administration around Trump, they have to focus on the midterm elections. Yeah. So that will essentially should eliminate a lot of these political noise which we now have. On the other hand, the economic situation, there are signs at the moment, so like a slowing labor market in the U.S. Let's take a look what the inflation numbers will be. So that's probably also a sign of a deteriorating economy in the U.S., which then would favor more defensive investments as healthcare.
So do you expect a normalization in next year?
Towards at the end of the year and then probably in the course of 2026, yeah.
The US is the most important market for healthcare. Now we have a series of changes, price reform, the most favored nation, new tariffs, and so on. What's just noise and what will have a significant impact on the sector and on investments?
Yeah, if it comes to the most favored nations pricing model, we believe that it depends on the consent of the House of Representatives and the Senate. So that's not an easy hurdle. So it's rather unlikely that will go through. Then we have tariffs. So we have seen, for example, in the medtech industry, how they dealt with tariffs. So, for them, especially for listed multinationals, it's relatively easy to do some modifications in the supply chain to sort of tariff optimize the supply chain. And then lastly, what's also discussed is NIH funding. So that's the money which can be used for base research for medical. Budget for 2025 is roughly $48 billion. Trump proposed a 40% cut. I think that's highly unlikely if you take a look at the Senate. So the Senate believes that there should be more money to do base research, and the House of Representatives believes in a stable budget. So it's highly unlikely that we will see that.
So we have the biotech sector, medtech sector, managed care, and big pharma. Which of these segments appears more resilient?
I think it depends a little bit on the factors, since the factors are quite different. For example, in biotech, the interest rate plays a big role. That's also the case for life science tools. In biotech, we have a great product pipeline. In tools, we see a great recovery of bioproduction, for example. Then if it comes to pharma, pharma benefits at the moment of this fading angst of the MFN, most favored nations. And then if it comes to medtech, medtech is in a great product cycle, greatest product cycle I've seen in the last 20 years. On top of that, we have a procedure growth in the medtech, which is 1 to 2% higher than it was prior to the pandemic.
Now, Bellevue Asset Management is launching an active healthcare ETF. Why?
It's quite simple. If you take a look at the global healthcare market, especially at the MSCI World Healthcare, so there are big performance difference between the best and the worst performing names, so to say. That was also the case if you take a look at the bigger names. So, for example, we saw a huge difference in 2024 between the performance of Eli Lilly, which was very positive, and Novo Nordisk, which was negative. So these are exactly, it all depends on stock selection. That's the reason why we launch an active product.
And why an ETF and not maybe a fund?
Couple of advantages if it comes to ETFs. On one hand, ETF, that it's in the name, it's exchange traded. So you can trade it like a share. So you can sell and buy. And you immediately have it in your account. The other thing is it's fully transparent. So we will also publish our portfolio on a daily basis. So all the investors know what's in there. So which positions, which weightings. And the last thing is cost efficient.
Yeah.
So it's much more cost efficient if you compare it to an active fund.
Where does the edge lie compared with a passive index?
A passive index just mirrors an index, which basically should result in the same performance and in the same risk. I think we can generate alpha for the reasons I mentioned before, so that you have huge differences between individual names in terms of performance. And I think we can do that with quite comparable risk.
Is this also the reason why the portfolio is based on a high conviction approach?
Yeah, I think the conviction approach we have is important. So what's a conviction approach for us? So we take a look at the relative strengths of the fundamental data, but we also take a look at valuations. We are looking for names which are underappreciated in terms of valuation in the market. And these are all these different factors which influence the conviction. Conviction can also be negative.
Yeah.
And then if it comes to portfolio construction of the Bellevue Healthcare ETF, so it's based on the benchmark. We can underweight, neutral weight, and overweight positions, as we do with that within our active funds, and we do that based on the conviction. And we also do that in this active ETF fund. And so, but the big difference is that we are capped, so that there are ranges of the underweights and overweights we can do, and that's just a measure to control the risk.
Who is this active ETF designed for?
On one hand, for professional investors. On the other hand, it will also be available through platforms. For example, Swissquote is one of them. I think in terms of function, so why should you invest in one product or in one product or one share? I think if you just want to be invested in healthcare, for the reasons I mentioned before, I think it makes absolutely sense to invest in the Bellevue Healthcare ETF, because then you don't have to make the choice between biotech, pharma, medtech, and stuff like that.
Mr. Fritsch, thank you so much.
Thanks so much for having me.